That is correct. Yeah. So basically what we're doing is with the temporary buy downs, we're qualifying you under the worst case scenario payment. That I think the philosophy there is to make sure we're not setting you up for failure financially. That's how the regulations are built as well.
Sure.
So on paper, even if those temporary buy downs lapse and we don't refinance, on paper you can still make those payments.
That makes sense. That makes sense. So you're not getting qualified on the lower payment, you're getting qualified on the higher payment.
100%. That's why if you need to lower your interest rate to qualify, that's why you would have to go with a permanent buy down in order to accomplish that. And the temporary buy down is just more of a budgetary convenience at that point.
Yeah. And when I've talked to buyers, I've helped them try to understand some of the strategy behind that temporary rate buy down. And a lot of times I'm like, well, after 2 or 3 years, if the interest rate goes back down, then you can refinance that into a better rate that's fixed through 30 years. One of the arguments that I hear with that is, well, then I have to pay the refinance fee. What's your thought on that?
Well, there are going to be traditionally some fees that are going to be a part of a refinance. But I know our company, Guild Mortgage, we are offering to waive all the lender fees that go along with a refinance. So that dramatically reduce the costs. Also, with us, we retain the servicing for probably about 90% of our loans. So the escrows that traditionally you have to bring to closing, we already have in-house. So typically with us, worst case scenario is they may have to pay for an appraisal and they may have some title fees to pay. But with a refinance, the title fees are a lot less traditionally than with a purchase. So, and those you just roll into that. So you might be looking at a couple $100 to $1,000. So it's not much, but if it's going to save you that much, like in the first couple months of payment, it's a huge net positive.
Sure.
Also, what a lot of people don't realize is that escrow account that we built to make the payments whole for the temporary buy down, if any money is left in there by the time we refinance, because we refinance before the 2 years is up, that money is still the client's. So oftentimes what happens is they just take that money,